Ever wonder what happens after a stock breaks out and then seems to falter? Hi, I'm back to guide you through another key trading strategy that can make these moments not just manageable, but profitable. Today, we're diving into how to master the 20-day EMA Shakeout entry setup, a powerful follow up to our discussion on the 10-week moving average pullback. In this method, we look for stocks in a strong uptrend that have recently broken out of a base. It's crucial that all moving averages are aligned with the 8 above the 20, 20 above 50, and 50 above the 200, signaling a solid uptrend. But here's where it gets interesting. The stock pulls back over a few sessions, dipping below the 20-day EMA, then swiftly recovers, presenting a prime buying opportunity. Here are the steps we'll cover. 1, identifying the uptrend. 2, spotting the shakeout. 3, the recovery. And 4, understanding the pullback. I'm Rick Pedicelli from Morpheus Trading Group, and with over 2 decades of experience in trading, I'm here to help you navigate these complex setups. If you're eager to learn more about making informed trades, hit that like button, subscribe to our channel, and let's jump right in. So the first chart here we're going to cover is AMD from a pullback entry in late December of 23, early January 24, so just a few weeks ago. And as we mentioned earlier, step 1 is identifying a strong uptrend. And we certainly have that with AMD. Bottomed out in December, January of 2023, strong uptrend, and it's based out from June until forming this handle here in early December and then breaking out from the cup and handle. So 1 is to identify the uptrend. All moving averages here are stacked. We have the 8 above the 20, 20 above the 50, and the 50 above the 200. This white line is just the 10-week moving average from the weekly chart that's on the daily. So once we identified a strong breakout, what we're looking for is just a pullback. Now that pullback may stop shy of breaking the 20-day EMA. It may form a reversal candle off the 20-day EMA, and we can look for an entry over the high of that reversal candle. But for this particular setup, we're looking for a close below the 20-day EMA, a shakeout below. Sometimes traders use the 20-day, or many traders use the 20-day EMA as a selling guide. Some don't have the patience to hold until the end of the day and get shaken out during the day out of the position and only to see the price push back higher within a few days. And that's exactly what we're looking for here. So this, in spotting the shakeout, we're looking for a 1 to 3 day dip below the moving average, the 20-day EMA. We're not looking for 5 or 1 to 2 weeks of price action below the 20. Just a few days is enough. So we spot the shakeout, the close below the 20. Next step is to wait for the price action to push through a prior day's high or to close back above that 20, which it does on January 5th, right? Yeah, the 5th right here. So whether or not you want to buy the move above the 2-day high, which is good, or wait until the closest to make sure that the price sticks above the moving average, that's up to you, but either way is fine. And so that would be the entry, and the stop would simply be beneath the lowest low below the 20-day EMA. And generally for these setups, we're looking at the price action that'll be sandwiched in between the 20 and the 10-week. Once we start to touch the 10-week, that's another setup. I know sometimes it's just a matter of a few percentage points, but for this setup, where the price action should remain above the 10-week MA. And the last step is 4 is understanding the pullback. And typically it's the pullback itself is anywhere from, I'd say 5 to 15%, sometimes as much as 18 if it's a more volatile stock, and possibly even 20. And usually that's over 3 to 7 days. And usually we see these pullbacks, they coincide with a pullback in the market too. As we see here, this is QQQ, this orange line. And when AMD pulls back in, so does QQQ. And this pullback is over 3 sessions, so there's a 3-bar shakeout, roughly 12% off the highs. So we're simply looking to take advantage of short-term strength and a strong uptrend. Pretty much the same thing what we do with the 10-week moving average when we buy off the 10-week, but these stocks are showing a bit more strength. Next up is PLTR from 2023. All right, so PLTR in May of 2023 gaps higher out of this base here. It's in a strong uptrend, but this is an uptrend that's just starting. It's off of a reversal. But as you'll see, by the time the 20 EMA setup develops, it'll be in a very strong uptrend. So But this is fine as well. I mean, it's the first move off the lows, a significant move. Then it's sideways, forms a base, then gaps up and breaks out. So this is transitioning from a downtrend to an uptrend, explosive price action. And this 1, 2, 3, 4 day pullback, day 5 is the reversal. As I mentioned earlier, this one is a bit more volatile. So this stock can move. So this pullback was close to 20%. Nasty shakeout below the 20-day EMA though. And within 3 days of that shakeout, it's back above the 20. The entry can be placed over the 3 days worth of highs. That also reclaims the 20-day EMA here on June 28th. Or again, one could wait for the close, then buy over the high of that day or buy the close or right before the close. Up to you. Stop again, placed beneath the recent swing low. You can look for, anywhere from, 2 to 3 times risk. If you're risking 6% of the trade, you're looking for 18 to 20% move. And most of the time, I think you'll find that this setup after a shakeout will allow for a decent move out. Once it gets going, you'll easily see 2 to or 3 to 4, even 5 times risk. With PLTR here, it actually rallies about 28% or so from the entry with about an 8% stop. So it's solid 3 to 4 times risk, not bad. And again, this pullback should or often coincides, maybe it might not always coincide with a pullback in the market, but I think most will. And you see here QQQ pulls back in as well. The next setup is also from 2023. Again, another bottoming type of basing action. We have this bottoming head and shoulders. Here's the left shoulder, right shoulder. This is the head. Price rips higher, holds the 200, and then breaks through the base. So we have a strong breakout here. The 8 is above 20, 20 above 50, 50 above 200. All moving averages are rising. So we have what looks to be a pretty strong uptrend. And then we have a 1, 2, 3, 4, 5, 6 day pullback. Well, 7 day, there's a lower there. So it is now though, and now is not a big mover. It's a 7% pullback. The price action is pretty orderly on the pullback too. So this will allow for a pretty tight stop. So as we can see on June 28th, the price action reclaims the 20-day on June 28th, also clears the prior day's high, and also closes above the 8-day EMA. One could enter at the close or the next day on the open. Stop is 2.5% away and now travels roughly 11% before stalling. So at least 4 to 5 times risk. Decent trade there. And again, the pullback coincides with a pullback in QQQ. And the last chart we'll cover is of net Cloudflare from 2021. And again, we're looking at a strong uptrend. Price stalls around 95 and then bases out, almost touches the 200 AMA. Bounces off the 200 and then breaks out. Strong breakout. And then we have a 1, 2, 3, 4, 5, 6 day shakeout before the reversal. We have 2 closes below the 20. This is a 11% pullback. Price action then reclaims the 20, closes above the prior day's high, actually closes above the 8-day or at the 8-day EMA too, and runs about 20% before pulling back. And I just for purposes of measuring the distance here, I measured it from the top, but we all know that as traders, you're not going to call the top of any swing trade, but the potential's there. There's a 6% or so stop, and that's again depending on how you enter. So 5 to 6% stop, 20% gain. The point being is there's enough meat there on that trade for a swing trader to come in and identify a strong uptrend and take advantage of a short-term pullback. And that's the beauty of this setup is you can miss the powerful breakout and still participate by catching the short-term pullback. In doing so, you're focusing on buying the strongest stocks out there too. So that's always a good thing. And as I mentioned earlier in the video, stay tuned for the essential tip on maximizing success with this strategy. I believe it's good to look for stocks that have broken out on strong volume. You want to see great price action, very impulsive move up, and then that 4 to 6 day pullback to scare people out. That's exactly what we want to see. And it also doesn't hurt if you're looking at a group that's got a few of these stocks doing something similar. All right, so just a quick review of the steps to the 20-day EMA shakeout entry. We want to, 1, identify the uptrend. look for a breakout and strong advance. And then 2, we're looking for that shakeout over 4 to 6 bars, anywhere from, I'd say, 7 to 15%, 5 to 15%, something like that. It doesn't have to be exact. As I mentioned earlier, if the stock's more volatile, it could be 18 to 20%. Then we're looking for the recovery back above the 20-day EMA. That's step 3, where we can enter over a prior day's high or enter above the day that closes above the 20-day EMA. And step 4 is understanding what the pullback is, which is usually a pullback in the market itself. And that's where the stock pulls back in. And during that time, we're focusing in on stocks that have shown a great strength during the initial advance. If you found these insights helpful, please show your support by hitting that like button and subscribing to our channel. For more in-depth analysis and to get our top swing trade setups with the exact entry and exit points, visit morpheustrading.com and click on Stock Picks. Join the MTGTribe today and be part of a community dedicated to successful trading. Thanks for joining us, and remember to trade what you see, not what you think.